On Tuesday, the European currency remained under pressure. However, buyers managed to recoup earlier losses in today's Asian session. Yesterday's German inflation data was in line with estimates but failed to boost demand for the European currency. In addition, Fed officials Michel Barr and Michael Bowman spoke yesterday, which also did little to support the euro. Instead, their comments drove the US dollar higher. After all, the Fed's stance on future monetary policy and the aggressiveness of interest rate cuts is still in question. I hope that today's US statistics will provide some clarity. Yesterday's macroeconomic calendar includes UK GDP data, which has already been released. The UK economy flatlined again in July after showing no growth in June, while analysts had forecast a slight gain of 0.2%. The 3-month average indicator was up 0.5%, below the 0.8 and 0.6 recorded in May and June respectively. This points to the need of the Bank of England to continue its cycle of interest rate cuts. Also, Britain has already reported industrial and manufacturing production data that proved to be dismal despite predicted growth. This also suggests that the regulator will lower its policy rate at the next meeting. Speaking of US statistics, inflation data is due out today. US consumer prices are estimated to have increased by 0.2% in August. The report is also expected to show headline inflation of 2.5%, a deceleration from July's 2.9% annual gain in prices. These could pave the way for a more pronounced rate cut by the Federal Reserve. At the same time, core CPI inflation, which excludes food and energy prices, is expected to rise 0.2% in August and remain at 3.2% on an annual basis. This in turn may dampen expectations for an aggressive rate cut, especially in light of recent jobs data. Instead, this could lead to a stronger dollar, thus adding to pressure on the euro and the British pound. Now let's look at the market from a technical perspective. The euro-dollar pair hit a new one-week low yesterday, but paired losses during today's Asian session. Currently, bulls are battling for the 1.1052 level. A false breakout at this mark will generate a sell signal, dragging the euro down to 1.1029. If the price breaks below this level and tests it from the bottom up, the European currency is expected to dip to 1.1008 and even 1.0984. With the news pointed to higher US inflation, such a steep decline is highly likely. In this case, the euro will extend its bearish run that began on August 26. In a bull case scenario, if the price breaks above 1.1052 or forms a false breakout at 1.1029, the euro will most likely rise to 1.1072. In case of data showing a more significant slowdown in US economic growth, the market will likely see a steeper rally to 1.1092, where I recommend going short on the rebound to catch an intraday correction of 15-20 pips. Short positions at 1.1072 and 1.1052 can only be considered on a false breakout. Meanwhile, the British pound has seen modest losses, weighed down by rather downbeat UK statistics. A false breakout at 1.3083 will generate a buy signal, driving sterling up to 1.3116. At this level, bears are likely to regain control of the market. If the price breaks above 31.16, the British currency is expected to extend gains to 1.3160 and even 31.97, where it would be wise to go short on the rebound, expecting a 30-35p move. Going short at 1.3160 and 31.16 will be relevant in the event of a false breakout. Alternatively, if bulls fail to take the lead, the pound-dollar pair is likely to remain range-bound until the release of US inflation data. If the price breaks through and fixes below 1.3083, sterling is expected to dive to 1.3049. A deeper drop to 1.3012 is possible if data shows increased price pressures in the US states. At the level of 1.3012, I recommend going long on a rebound, counting on a rise of 35-40 pips. Long positions at 1.3049 and 3083 can only be opened after a false breakout. Best of luck.